Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so looking at our market today, we tried to rally off up to around sort of 72.30 there, but pulled back and just closed right on this 72. We've been hugging this 72 level for we're coming on to 4 sessions now. So stuck sideways right into the edge of that pennant pattern that tried to break to the upside, but I wouldn't call that a breakout now. Things are looking a little bit oversold in the short term, but very overbought to me overall in the medium term. So anything's on the table here. Breakout to the upside, we're back to resistance or higher. Break to the downside, we'll be watching very closely into the 7,000. 7,000 is back to the 200-day average. I think that's a likely target to the downside. And a breakthrough there gets us quite a bit more bearish, right? So technically, really, the uptrend's still intact through here. I think that's going to get challenged over the next few days for obvious reasons. I'll talk to that a bit more in a moment. But nonetheless, yeah, I think we'll definitely challenge that or continue it, right, and go much, much higher. A break of 74 gets you back to all-time highs of 76. Look, I think a few things would have to play out perfectly for that to happen. It's on the table. I'm not going to try and sort of say what's going to happen in the future here, guys, with the CPI reading tonight in the US. So, anything's really on the table. But if we just focus technically, it's sort of saying that if this uptrend continues, we're easily getting to 76, right? And then if the pennant does break to the downside, well, then 70 is a very clear target in the very short term here. Now let's get across to the S&P 500. They're also trading into the edge of a sort of triangle type pattern, and that's a pennant here at the moment. Trading right near the 200-day average in red there, trading right near the downtrend line. This is either going to break higher or lower, I believe, this week. Okay, we're going to have our answer by the end of this week, guys. Between the CPI tonight, the Fed announcement Thursday morning, we're going to have some answers here on which way this market's going to run through to Christmas. Okay, now technically 43, I think, is the target to the upside if that 200-day actually properly breaks and we get through 41. Okay, 43 is your target to the upside. To the downside, well, 38 is a likely target in the short term, 37, and we'll see what happens through there if it gets that low. I don't think it will, to be honest, but we'll see what happens. So, as you guys know, I alluded to before, we've got the CPI reading tonight. And basically, at this point of time, the expectations is a drop in year-on-year core inflation as well as regular CPI data as well. So all in all, headline and core is expected to come down. Right now, if we meet those expectations, I think the market's going to be happy. Right, I think we will see a drift up happen. For the most part, this is priced in. So, do I think it's going to rally all the way up to 43 tonight? No. Do I think it's going to jump to 41 tonight? Probably. Yeah, I could see a 100-point rise in the S&P tonight for sure. We have to see it come in as expectation or better, okay, for that rally to occur. If it comes in lower than expected, if it comes in slightly lower, we'll probably just hang around here for a while. If it comes in extremely lower, well, markets are going to go nuts to the downside, guys. Like, that's where your big risk comes in, right? If something unforeseen happens here and inflation comes back in at 8%, it's cooked. This market's going to fly down, okay? Why? Because the Federal Reserve is probably going to lift rates harder next year than what everyone's expecting and for longer. Right, so at this point of time, we're expecting a 50-point lift Thursday. That's baked in, okay? Thursday morning, 6 o'clock in the morning, you're going to our time, Australian time, which is about 2 hours before the market closes in the US. We're going to see the Federal Reserve. It's pretty much certain raise rates by 50 points. Okay, if they go lower, the market's going to go nuts. I don't think it's going to do that. I mean, that's the upside, right? If they go 75 points, and the only way they'll do 75 points is if this CPI comes in much, much higher. I actually don't think they'll do much for this Fed meeting. I actually think 50 points is the likelihood no matter what, right? That's my opinion. Now, if you look at expectations out to next year, expectations at this point for the February meeting, yes, February, it means we don't see another Fed meeting for about 7 weeks. that means February at this stage they're expecting 50-point rise again. Okay, now if CPI comes in higher than expected, everyone's going to bet that in February they're going to lift harder, and that's where the market gets spooked. If it comes in lower, then everyone's going to start speculating lower rate hikes for February next year, and that's where you could see a substantial rally in the marketplace. All right, so this is what it's stemming off at the moment. I think we're really at a true pivot point between the technicals. You can see as a pivot point because you're right at the edge of that triangle. Then fundamentally we're at the pivot point because we do not know whether this CPI reading is going to come in a bit higher or a bit lower. I suspect we're going to come in fairly close to expectations and the market will be up. All right, that's my suspicion at this point of time. I don't have a crystal ball. I couldn't tell you, right? So the other element of markets at the moment really is what's happening over in China. We're hearing, more and more news of China moving away from their COVID zero policy, talking a bit more that the current variants of COVID are tamer compared to what they were a few years back. It is causing a little bit of havoc over there as they're slowly coming out. Some interesting articles coming out around that. But nonetheless, guys, look, this is positive, right? This is positive for commodities long term. This is positive for the world economy long term, for China to reopen and get back to some level of normal. So, look, the markets have definitely rallied on this. Like we've seen iron ore come up considerably over the last month. Miners have come up considerably, but they're looking a bit overdone. Okay, so can BHP really jump into an all-time high on the back of this? I don't think so at this stage, right? So this is what's in the balance at the moment. It's something in between what's happening in the US with inflation and Fed Reserve to what's happening in China. And our market locally will do something in between, right? So if China keeps rallying and US pulls back, yes, we will pull back, but not as hard. And then if the US pulls right back and China keeps rallying, like vice versa, right? So look, yeah, look, you got to look at both at this stage when it comes to our market. But as the US goes, really for me, it's all about the inflation and the Fed Reserve, right? It always has been, always will be. They're the major two factors to keep an eye on. So Santa Rally, okay, it's on the table, guys. Let's see what happens here, right? Tonight and tomorrow night are the two sort of deciding factors of what kind of Christmas rally we get. If we see CPI come in a little bit lower than expected or as expected, then we see the Fed lift rates by 50 points on Thursday with some sort of neutrality in their communication. You know what Jay Powell's going to say, guys. He's going to come out and say exactly what he said the last few weeks, right? Don't worry about how much we're lifting rates by. Worry about how long we're going to have to hold them up there for. And how far we're going to have to go, right? Now, that's going to come down to the CPI. So what's more important, the CPI reading, right? That comes in low, then it takes the pressure off the Fed. Comes in high, it puts the pressure back on the Fed, right? So really tonight's data is more important than anything, okay? That's more important than the Fed, right? Because that dictates what the Fed's likely to do next, okay? So, yeah, next two nights are going to be telling, okay? Now, typically, guys, seasonally, if I take all this noise out, right, look at the seasonal pattern. If we have a strong November, we usually pull back into the middle of December and then rally into Christmas. Well, we're definitely pulling back into the middle of December. If we pull back a little bit further, okay, in the next few sessions, we may still rally into Christmas, right, and through Christmas. I kind of still feel there's going to be a Christmas rally even if we dump here on the back of some higher CPI, to be honest, right? It just depends on it comes down to where the bottom of this move is, right? It's whether we get another week worth of selling before we quickly push up into Christmas or whether we just start pushing up from tomorrow, right? The CPI is going to dictate that. But usually you get some kind of a push up into Christmas, and it's just a matter of finding the bottom before that happens, right? Now, only caveat to that, guys, is if the CPI comes in really high, this market's just going to keep dumping, right? That's my opinion, right? You see an 8% plus CPI tonight, that this market's S&P's back to 36, in my opinion, Okay. Now, guys, this is going to be my last video before Christmas, okay? So I'll see you guys after Christmas. I will run a video when I come back in at some point. It might be after the new year. I might throw something up on YouTube between Christmas and New Year, just for you guys that want to jump on and have a look. So please jump in. But yeah, I start my holidays at the end of this week through to then I come back after Christmas, and I'll be trading in between the Christmas and the New Year period. So in between those days, if I have time, I'll quickly throw a video out. But yeah, look, guys, whether we get a Christmas rally this year or not, or how much we rally up or not, it really comes down to tonight, right? That's the key bit of information we want to see. All right, we want to see that continued ease of inflation in the US. That means, the Fed won't have to lift as far for as long, and the likelihood of a soft landing in the US is much, much higher. Whereas if the inflation doesn't come under control sooner rather than later, then the Fed's going to go harder. They're going to probably have a hard landing, and the markets will dump on the back of that. Okay, so that's the current sort of key bits of information you're looking for. Then on the side of that, for our market locally, it's a combination of everything that's happened in the US plus what's happening in China. They're the two majors. Okay. All right. So thanks for listening in. I hope you have a very Merry Christmas and a fantastic New Year. And I'll catch you all in 2023. Bye for now.